This video covers Learning Objective 3, Part 2, Straight-Line Depreciation, in Chapter 7, Plant Assets, Natural Resources, and Intangibles. So let's get started. There are three main depreciation methods, including straight-line, units of production, and double declining balance. We are covering the straight-line method in this video. In the straight-line method, an equal amount of depreciation is assigned to each year or period of asset use. Depreciable cost is divided by useful life in years to determine the annual depreciation expense. The straight-line method is the most common method used by U.S. companies for financial reporting purposes. It is also the easiest method to use. Let's go through a quick reminder of some basic depreciation concepts before we go through a straight-line depreciation example. The book value of a plant asset is its original cost less accumulated depreciation. Accumulated depreciation is a contra asset that contains a running total of all depreciation expense for that asset over its lifetime. At the end of an asset's useful life, its book value will be equal to its estimated residual value. We have two basic formulas for when using the straight-line method. The first is depreciable cost is equal to the original cost less residual value. Depreciation expense per period is equal to the depreciable cost divided by the estimated useful life. Now we are going to go through a straight-line depreciation example. Cool Freeze Company bought a used truck on January 1st, 2019 for $13,000. The estimated useful life of the truck is 5 years. Its estimated residual value is $1,000. Assume that Cool Freeze uses the straight-line method of depreciation. We are going to set up a table like you see on the slide. I put the original cost of $13,000 and the residual value of $1,000 and the estimated life in years of 5 years at the top of the screen just to help us remember those numbers as we use them in this example. I set up a worksheet that has the first column for year. The second column is depreciable cost. The third column, annual depreciation expense. The fourth column, accumulated depreciation. And finally, book value is in the last column. Just as a reminder, accumulated depreciation is a running total of all depreciation expense to date and is a contra asset. The book value formula is original cost minus accumulated depreciation. I filled in the first line of the worksheet here. The first line is simply to list the original cost of the asset, and we're going to put that in the book value column. The book value of an asset is its original cost less the accumulated depreciation, and since we don't have any accumulated depreciation yet, the book value on the date of purchase is the cost of $13,000. This asset was purchased on the first day of 2018, so our first row after the original cost is for the year ending December 31st, 2018. The depreciable cost for any asset using the straight-line method is the asset's original cost less its estimated residual value, or $13,000 minus $1,000 equal to $12,000. The next column holds the annual depreciation expense. For the straight-line method, we take the depreciable cost and divide by the estimated years to get the annual depreciation expense. Here we take $12,000 divided by 5 years will give us $2,400 per year of annual depreciation expense. The accumulated depreciation column is a running total of all depreciation expense to date. Here we only had one annual depreciation amount, so it's $2,400. And finally, the book value is the original cost of $13,000 less the accumulated depreciation of $2,400, so we arrive at $10,600. And we are done with the first year depreciation. Next, we go to the second year. The depreciable cost never changes for straight-line depreciation, so it is $12,000 again. Annual depreciation expense is the same every year under straight-line depreciation, so we put $2,400 in the annual depreciation expense. Accumulated depreciation is a running total of all the depreciation expense to date. So here we would take the 2018 $2,400 depreciation expense and add that to the 2019 depreciation expense of $2,400, coming up with total accumulated depreciation of $4,800. For the book value at the end of 2019, we will take the original cost of $13,000 and subtract the accumulated depreciation of $4,800 to arrive at the book value at the end of 2019 of $8,200. We will repeat the same calculations for the years of 2020, 2021, and 2022. Using straight-line depreciation, the depreciable cost will be the same every year, as will the annual depreciation expense. Note the accumulated depreciation grows each year by the amount of the annual depreciation expense. Book value goes down every year by the amount of the annual depreciation expense. At the end of the asset's life, its book value will be equal to its residual value. Here, our ending book value is $1,000, which is equal to the estimated residual value that we were given in the beginning. And that concludes this example of straight-line depreciation. Now we have a few knowledge check questions coming up to test your understanding of this material. After I read the question, pause the video and try to answer it. Once you restart the video, I will be walking through the answer for the question. Let's go. The first question reads, cost minus residual value divided by useful life in years is the formula for, the choices are straight-line method, units of production method, double declining balance method, or modified accelerated cost recovery method. The answer is straight-line method. Cost minus residual value divided by useful life is the formula for the straight-line method. The second question reads, Kramer Company purchased equipment on May 1, 2017 for $600,000. The residual value is $60,000 and the estimated useful life is 10 years. What is the depreciation expense for the year ending December 31, 2017 if the company uses the straight-line method? The choices are $40,000, $36,000, $60,000, or $54,000. The answer is $54,000. To get this answer of $54,000, we need to calculate the depreciable cost, which is $600,000 minus the $60,000 residual value, and divide that total by the 10-year estimated useful life of this asset, so we would get $54,000 per year as the answer to this question. That concludes our review of the straight-line depreciation method. Thanks for watching.